Hello guys and welcome to a new deep value video. Today we're going to deep dive into the financials of Amazon.com Incorporated, ticker symbol AMZN. Now let's start with a brief overview. Amazon is a company operating in the e-commerce, cloud advertising, and digital streaming industries. This company is known for Amazon.com and the AWS. As of the 7th of August 2024, its stock price stands at $162 and it has a market cap of 1.7 trillion. Moving on to some key valuation metrics, the company's PE is 38.2, while its price to cash flow is 15.7. This huge discrepancy is caused by 49 billion in depreciation and amortization costs, so you shouldn't worry too much. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 105%, while its bottom line has grown by 162.5%. In terms of earnings per share, there has been a growth of 152%. However, it's also important to note the change in the number of common shares outstanding, which stands at 10.5 billion, reflecting a 4.1% change. Additionally, the interest coverage ratio is 19.7, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 0.88. Looking at the long-term debt to equity ratio, we find it at 0.29 and the overall debt to equity ratio at 1.34. Let's now look at the book value per share, which is $32.54. Transitioning over to the cash flow statement, cash from operations is 87 billion, reflecting a change over the past 5 years of 127%. Meanwhile, cash from investing is 49 billion, showing a change of 105%. Lastly, we have cash from financing activities, which has changed by 57.7% over the same period. Let's now look at the return metrics to see how well the company is utilizing its resources. The return on equity is 15%, the return on investment is 11.7%, and the return on assets is 5.76%, both indicating how efficiently the company is generating returns from its investments and assets. Additionally, the ROIC stands at 13.3%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's conduct a DCF analysis. By using a discount rate of 10%, of 9%, a revenue growth rate of 15% for 10 years, and a perpetuity growth rate of 4%, we estimate the fair value of the stock to be $110. This suggests that the stock is currently overvalued by 47.2%. To wrap up my analysis, I would rate Amazon as a buy. But this comes with a huge caveat because I only rate it as a buy because of its future prospects for growth in earnings power. If you are more value oriented and you want a lower valuation multiple, then you should start buying somewhere around sub 120, sub 110 levels. Of course, as always, there is a disclaimer that I'm not an investment professional, so this should not be taken as investment advice. This is strictly my personal opinion. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.